Our next presenting company is Amplify Energy. They're a Houston-based company with mature legacy fields with operations in Oklahoma, the Rockies, offshore Southern California, and East Texas and North Louisiana. Here to talk about the company is Daniel Furby, their CEO. Please welcome him.
Thank you. Thank you. We'll go through this. Like he said, we are a diverse, low decline, long life E&P company. We have 4 different operating regions currently. We'll talk a lot about the one on the top here, the Beta asset, which is our offshore Federal Waters, California asset. We have our Bear Oil asset, which is in Wyoming. It's a CO2 flood, very mature, predictable asset, 100% oil. We have an East Texas, North Louisiana asset. So this is a partly mature, well count, large footprint, producing from all the historical horizons you see in East Texas, but then we also have very attractive Haynesville acreage, especially as the Haynesville play continues to move to the west into our position. We have several JVs we've been farming out our position in some of the Haynesville acreage and participating in wells with some of our operating partners. And we have an Oklahoma position. This position is the Mississippi Lime position. We've owned this since 2019. It's a very efficient operation and a lot of upside here as well, which we'll talk about our intention with those assets shortly. Our enterprise value just under $300 million and market cap of between $150 and $160 million. So moving on, this year will likely be a transformational year for the company, as we recently sold one of our positions, a non-op Eagle Ford position. We sold in the second quarter, generated $23 million net proceeds, and then we recently announced our intention to market our East Texas and Oklahoma positions. We intend to take bids on those positions later this quarter. The strategy of the company going forward is successful with those divestitures, is to simplify the structure and focus on our Beta position, and also Bear Oil. We see a lot of upside there through cost-cutting initiatives. Point to a few other things on this slide. We'll point you to the middle of the slide and shareholder value creation. Our last Beta well we brought online is producing 850 barrels a day currently. It's been online for 4 months. We target to drill these wells for approximately $6 million. So these are very attractive projects, and we continue to accelerate that program. We also participate in 4 non-op wells in East Texas with one of our partners. That well is currently producing 13 million a day to our net interest, and we have about 25% interest in those wells. So 2 of those wells were Cotton Valley, 2 were Haynesville. So it goes to show the productivity of the Haynesville wells and our portion of the acreage. We generate free cash flow this year, even with the selling of the East Texas positions and selling the Eagle Ford position thus far. And we also sold some of our East Texas acreage that's brought in proceeds above and beyond the free cash flow we intend to generate. Also, we've been investing in our Beta position, a lot of facilities investment to accelerate that production, and a lot of drilling at Beta thus far. Capital discipline, we've reduced our debt by $60 million from year-end 2022 to current and brought our leverage down significantly. Talking about our current valuation, we're just under $4 per share at $60 oil, assuming PV10 for PD and our PUD value at PV20. We're looking at $6 per share, and at $65 and over $9. So we'll talk about in a minute how we don't think this PUD value really represents the upside we see in Beta, which, like we talked about, we'll be focusing on as we move forward. So just more characteristics of our assets, very low decline base, so 5% annualized decline, and also our R/P index, 1.3 times our peer group. So we're looking about 14x R/P at the end of Q2. Our comparison here is at the end of Q1, just about 12x. So very mature, predictable cash flow from these assets. Let's talk about our Beta asset. So we started a development program here in middle of last year, and we brought online 4 wells so far. 3 of the wells, we'll talk about in a minute, are D-sand, which are primary formation, and excellent results thus far. Primarily from those 3 wells, we've grown our production by 30%. So we're excited about this, and we see a lot of oil in place here, so to be recovered, and we're developing this field as we move forward. So looking at these 3 wells, we have a type curve currently we put out in the beta field of an IP of about 400 barrels a day. That generates just over 500 MBO gross oil, and at a capital cost about $5.8 million, 90% rate of return is $65 oil. You can see our 3 wells so far significantly outperform this type curve. And I'll point you to some of the stats here in terms of gross EUR from these wells. This is the last well we brought online as we continue to get better as we drill these wells. This well's been online for 4 months. IP'd at 910 barrels a day. It still produced 850 barrels a day. So a very flat decline, which is representative of this field, even with development. So this is a heavy oil, but high perm reservoir. So we expect to see very little decline as we bring these wells online. Our break-even cost of these wells with our type curve is about $33 per barrel. So obviously competes very well with any area or development in the lower 48. And this data is from wells turned online since 2022 from Embarrass. So if we step back and look at the beta field, just a little history of this field, it was discovered in the 80s from Shell. So in the 80s, Shell came in, discovered this field, developed 3 platforms, and 2 of the platforms are production and drilling platforms, with the drilling rigs integrated into the platforms, and one of them is a treating and processing platform. And then we ship the oil to shore through a pipeline, and we sell right at the custody transfer point, right at the Port of Long Beach. So you can see here we have the 2 production platforms. I'm sorry, let me go back. In the yellow squares. So a lot of people ask, why now, right? This field was discovered in the 80s. How's there so much oil left to recover? And why are you guys doing it others haven't? So in the 80s, there wasn't the ability to get some of the wells drilled to where we're drilling. And the reason being, we don't show this chart because it'd just be a jumbled mess, but there's about 120 sticks coming from those two yellow dots right there, 2 yellow squares, those 2 platforms. So from the 80s to now, what we've done is we've upgraded the rigs, so we now have obviously top drives on the rigs, upgraded mud systems. We also utilize managed pressure drilling, and we have several different ancillary things we've upgraded since then. Use rotary steerables and several different things they didn't have in the 80s. So that allows us to drill a lot of these locations they just simply couldn't drill in the 80s. Since the 80s, it changed ownership in the 90s and early 2000s, and there was some drilling being done at that time, marginal results. But we feel like we've really cracked the code here and have done some really good things over the past 4 wells. So when we look at this, we're just showing the 25 PUD locations we currently have, and most of those are DSAN locations. But when we look at this, we see a lot more upside beyond these 25 PUD locations. So here's a type curve of the reservoir. And if you look back in the 80s, what was typically done, and in the 90s, some of the limited drilling they did, it was more or less a vertical or low inclination well and commingled all these formations. What we're doing now is we're essentially drilling horizontally through these locations. So we're targeting the DSAN locations. It's got the best pay, and the 3 wells drilled so far are the excellent results we've seen thus far. So beyond the cumulative production thus far from the field, which you see here is just over 100 million barrels, and the PDP recovery you see remaining, and the PUDs we have on the books utilizing the type curve we just showed, which, of course, the results seen so far are quite a bit above that type curve. We expect to recover approximately 128 million barrels from just those 25 PUDs. So as you can imagine, from the 80s to now, there's been a lot of studies done on this field in terms of the original oil in place. So the low end of those studies, about 600 million barrels, the high end's 1 billion barrels. And we also have a lot of analog fields, Southern California, as you know. So onshore and nearshore state water fields, very similar rock and very similar oil characteristics. So we see recovery factors for those fields between 30 and 40%. So with that, we would expect at the low end of the oil in place estimates to the high end, and the low end of the analog field recovery factors to the high end, to recover somewhere between 180 million to 400 million barrels. And we project after these 25 locations, if they only come in at the type curve, to recover 128 million barrels. So after this PUD recovery, we still expect to have between 50 to 170 million barrels to recover. So this recovery factor and these reserves left here The results we've seen over the past year, since we upgraded all of our equipment, upgraded our drilling systems, upgraded the way we drill these wells, and we're really the only ones who have ever drilled horizontally through this reservoir. The results we've seen in these recoveries that are remaining is why I get so excited about this, and some of the reasons for our strategy changes as a company. So with that, we'll go here, and once again, just to go over what we went through before, strong balance sheet, but we think we can grow beyond here through our beta field mostly. Even without the beta field development and the growth we've seen so far and expect to see, see a very high equity value, 147% premium to our current share price. Free cash flow positive, even with the investment put into beta before we see the growth that we expect to see through acceleration. And our beta field development, obviously, is where we'll be focusing going forward. So I think that's all we got. Thank you.